Good afternoon, everyone. This is Henry. As we get into tonight's video review, we're going to start off here looking at the spiders. Had a pretty significant bounce, and a big part of the trading plan that I work with is that when these blue arrows show up, they're showing you enough of a reversal to get you back to the 21 EMA. So as we head into the weekend, this will be the big decision. Again, today closing above it. Monday will be the big question of whether or not we can get two closes above that level. But I think the main thing that we've got to be keeping an eye on here, and the chart that really decides the fate of so many markets, is the 10-year yield. So as a Fibonacci analyst, you can look at this from the 49.97 swing high down into this swing low that I think we could all agree are very critical anchor points. And inside that, you can see how the 786 retracement was the high tick. It was 1 penny off yesterday. So you kind of have, this little bit of fear, anticipation as Meta earnings really got hammered, but then Google and Microsoft to the rescue, allow TNX to pull back a little bit back off that 786. So do keep an eye on this chart as you get into the early part of next week. If that resistance can hold and it backs off, well, it's going to be easier to buy stocks. If it gets through the 786, I think has bigger implications. That would suggest that then we're going to go look at the old swing high and then the extensions that come into play up there above 53. So whichever way it plays out, just keep an eye on that chart. Again, I think its implications will be important. And then I wanted to give you something that was kind of like an actionable takeaway. That idea on yields is more just a watch, and let's see if it can be a helpful market metric. But I also wanted to give you Walmart. This is a little bit outside of maybe where my day-to-day trading goes on. But you've got a setup that I think is worth a minute, and coming in and discussing kind of some nuances here. Because, not to sound uncommitted, but this could go either way. When you see the 61.66 swing high down into this swing low, you'll notice the 618 retracement of that move is the area where you are currently paused. You can see this has moved into a high compression squeeze, which just means the recent range has become very tight and cannot be sustained forever. Eventually this thing is going to break out. And I just found it interesting that if you take away all of your studies and you look at this just purely off of price alone, notice that the decline that preceded the rally, this swing high down into this swing low, is mirrored from the 61.66. That symmetrical move helped put in this low back here around 58. And when you have patterns like that, it is suggesting that there may still be at least a new high available. So you've got your pattern, you've got your symmetry, you've got the squeeze. The next thing that you need to see for your very best trades is an options market that goes along with it. Now, if we look at Walmart through the composite view here, you can see that it's not a terribly active name. This recent activity on the far left-hand side, you can see how that's more of a white color, and then this is showing you that same thing. So for me, it's just balancing the idea that there's not a ton of option activity in here. 60 is the critical wall, for the current analysis, but might there be some interest in these in the weeks ahead because Walmart is approaching earnings? So, just so many things that I try to look for in a setup. Not to say that this is going to work, but when you've got so many things that all come together, the other thing that I wanted to add to the thought process for this trade, and it is shown very cleanly through the term structure, is trying to buy high implied volatility, right? So IV shown here on the left, various expirations shown as these plot points, and you can see right here where Walmart earnings are going to be. So, you're buying, somewhat high implied volatility, but with the hopes that it will be even higher as we get closer to earnings. And if you can catch direction, something like those earnings series $60 calls may be a way to make a little bit of cash. So I wanted to put that on your watch list, give you the couple of caveats around it, and we'll see how it performs in the weeks ahead. Y'all have a great weekend, and I hope to see you in the chat rooms next week. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.